Okay, so starting explaining this setup, something like started off like this was the daily dealing range on Tuesday, the previous day. This was Tuesday price action. We noticed that price opened right here and it closed right here, meaning this was a bearish. The the market was so bearish, meaning the supply exceeded the demand of the euro against the USD. So as we know, like this is the most commonly traded currency, Euro USD. All right, so if this was our dealing range, so we see how is the price action behaving coming to the new day. All right, it started off by again breaking below this low right here, the previous low, the 4 hour. What did the 4 hour like? What did price action do in the next 4 hours after the opening? We noticed that price continued to trend downwards, still showing like the supply stronger than the demand. Again, the next hour, what did price deliver to us? Again, showed that the supply was still stronger than the demand. We saw some buyers coming in, forming a pullback. We noticed that price reacted at this supply zone again. Again, it continued to go down the next 4 hour price range. So we always mark the 4 hour price action since I'm an intraday trader. Like I'm just an intraday trader, just looking for opportunities within the day. So I monitor what's happening. This was the high. This was the lowest price I had at the moment. So again, this was like the range I had. This was the range, the low. Always wait for the 4 hour to either close above the range. This was our highest price, our lowest price, because it closed below the 4 hour price action that was before. So what do we notice? Again, this next 4 hour price action, supply was stronger than demand according to the price delivery. Again, it closed below this low. Price again closed below this low. What do we notice? That we got, now this one was our range. And this was our high. So this one remained our previous strong level of reference. So if this was the previous 4 hour high and low of the previous price delivery, we always wait for the market. How is the market behaving? The market structure in the range for some opportunities, because price always does three things. Either breaks out of the zone, retraces, and it breaks the low, or it breaks out of the zone, it comes back into the range, and it shifts to the upside. Breakout, retrace, continue to trend, breakout, pull back, and fail, going back to the opposite, or price to be ranging. As you see, this was our highest price and the lowest price. Price either breaks out, it continues to trend upwards above the range, or breaks out and fails, comes back to the range, and it continues to push downwards. What do we have here? We have like this was the impulsive move we had before, and the supply zone right here. In case price breaks out of our range, it comes back, it reacts at this supply zone, as we see right here. It reacted at this supply zone right here. After reacting, it came back to our entry level. Or before getting the entry, what we didn't, before reaching that part of the entry, what did we notice right here? We noticed that once we're in this range of the 4-hour, we monitor as zones through the 4-hour, the 1 hour. Like 4-hour gives us the range. 1 hour, like we monitor the areas of interest, our areas of interest on the 1 hour. The 15 minutes, we monitor the structure and the zones. The 5 minutes, now it's the confirmation of this price action for us getting an entry in case of any opportunity. All right, so this was the recent zone. So we see like it closed bearish, the 4-hour closed bearish. So this is the range. We notice what happens. According to what we see is that we got a change in trend. This was the recent low. As we see the recent low, so this is the shift. I want this shift to be like the 1 hour engulfing the previous 1 hour structure. For me to confirm my shift, I want the 1 hour engulfing the price action of the previous 1 hour. Impulsively, with a displacement to confirm. What do you notice? This was the 8 a.m. from 8 a.m. to 9 a.m. What did the 9 a.m. price action do? Price action was, demand was strong, that it broke out, shifted, meaning we got a change in price delivery. This was the opening of the 8 a.m. The 9 a.m., where did it close? It closed above the price action of 8 a.m. This is the shift, or change in price delivery. After that, what did we notice? Like we noticed a retracement back to this demand zone. So you always don't know if the zone is going to hold or it's going to fail. But you have to have like belief and trust in your way of analyzing, because it's either two choices. It works out or it fails. There is no guarantee that the zone is going to hold, but according to the experience and according to what your strategy tells you, you follow it, you miss out. Two options, you miss out, successful, or you wait for the next setup. But you just have to take the chance. All right, so we have a demand zone here on the 5 minutes. If this was an impulsive move, the retracement we see, we got the entry. So for us to have the confidence, we see that now this was the current price for our price range, for our current 4-hour price action. What do we notice? That it was the demand was so high that it broke out of this previous 4-hour range we had right here. It broke out. Now this is now like like a shift after after this change in state of price delivery. Now we notice this as our shift. The second shift on the like a higher time frame, because it engulfed the 4-hour, engulfed the previous 4-hour, which we had here. And after it engulfed, it closed above this price range we had here, above our range. The aggressive sellers, price closed above, meaning our range. Now this one became our range. And in this range, the demand is strong and the supply. So I normally target like 30 pips, risking 10. And the great target we have here was this high right here. This was our immediate target after this zone, because price can sometimes retrace and pull us out. What did we notice? After getting the range of the next 4-hour, remember this now price is now bullish because it closed above the previous price action of this range. So our range shifted to now this candle. After hitting the target, then we leave So what do we notice right here? So above this, we have a supply zone right here. The last bullish candle for the selling started also acts as the target once you're in buy. Oh. So sometimes after taking out of this range, we get a retracement that may likely. That's why we don't want to delay in a setup of intraday trading, because this is also a strong zone. You notice this price swept this previous low, the previous lower highs we had there, price swept them, and then it was aggressive. So you see, as price reacted in this supply zone right here, we marked after it swept above the range, it closed inside the range. This 4-hour price action closed inside the range. And once we close inside the range, meaning like price is more likely to either continue again or give us a huge pullback inside of our range. As you see, it reacted back to our entry area. So that is it. Ranges, structure, shift confirmations. Then you wait and see what happens next. All right.